Anna, in the last couple of years, I've heard a lot of reports and the term underwater is used. What does it mean when a house is underwater?
Basically, it just means that the homeowner owes more to the bank or the mortgage lender than their house is worth. And so if the home is worth $200,000 and the mortgage is $225,000, then that's what's called negative equity position for that $25,000. And if the borrower has a second mortgage or a home equity line, then those mortgages are all added up, and then that's compared to the property value to see whether or not there's any equity, or if it's the reverse, which would be negative equity.
Are there places in the country that there's more negative equity?
Yeah, it varies from region to region, but I know it sounds a little bit odd, but the sand states such as Nevada, Florida, and Arizona recently have had the highest or more sustaining rates of negative equity, but it's been spotty around the country over the past several years.
Is there improvement anywhere?
Yes, there has been improvement. About a year ago, we had 15.5 million homes that were in a negative equity position in the United States. And within the next 6 or 9 month period, that number dropped to 9.8 million. So it was a 35% decrease in negative equity.
That certainly sounds positive. What do you think's behind that? Maybe real estate going up?
Yeah, real estate is going up in a couple of different areas across the country, and that trend is always changing. And it's looked at very, very closely by mortgage lenders and insurers national level. But there has been a program called loan modification, and what a loan modification does, it's a government subsidized program that actually helps distressed homeowners when their home is underwater.
So Anna, tell me more about these loan modification programs.
Well, in 2009, Congress enacted the Making Homes Affordable Act, the Financial Stability Act. And out of that act, HUD created the HAMP program, which is called the Homeownership Assistance Modification Program. So a borrower, if they have a home underwater, can approach their mortgage lender or their bank or their loan servicer and apply for a loan modification, which would be more affordable terms for them to afford.
So I think what I'm hearing you say is that homeowners have to meet certain criteria.
Initially, you had to have a loan that was purchased by Fannie Mae or Freddie Mac. But HAMP is also associated with a number of other programs which might have changing criteria. So there's nothing that's really been carved in stone here.
So Anna, are there income requirements? Because I would imagine in some of these areas unemployment's pretty high.
You're absolutely right, Kim. And there have been a lot of areas where unemployment was a problem and it was addressed. I mean, if you have a home underwater and you don't have a job, how are you supposed to move to get another job if you can't sell your house? Right. So in 2010, President Obama launched a program for unemployed homeowners who had a distressed mortgage situation. And what they offered through this program is a forbearance, which means that your mortgage is kind of suspended for a period of time, or you can get a temporary reduction in your mortgage payment.
So you mentioned forbearance, and that would possibly result in the suspension of payments. So explain that a little more to me, if you could.
Well, the suspension of payments is going to be short-term under the unemployed program, but forbearance is one of several options that have been created to help borrowers avoid foreclosure. There are a lot of foreclosure prevention programs going on in the United States. As a matter of fact, because of these programs, foreclosure rate has dropped 21% in the past year.
Well, that certainly sounds like good news, but tell me some of the other options so that a homeowner can avoid foreclosure.
Well, we think of foreclosure and the real estate financing industry as being the last resort. But we have to remember that homeowners, if they have a home that's underwater, some of them want to move and some of them don't want to move. So as a nation, we've really been dealing with two problems. One of them is negative equity and the other one is low mobility. So under a lot of our government programs and initiatives, especially the most recent administration's tax incentive and stimulus program, we have what's called an incentive for employment growth. And so some of these borrowers have been giving new jobs in other cities. And so in association with the forbearance program and deed in lieu of foreclosure, borrowers have been able to leave their distressed home and then get a job and a new home someplace else.
So low mobility, what exactly does that mean?
Well, to address the low mobility crisis, which is basically means that a person can't move to their new job, the government, in addition to creating programs to help borrowers deal with their distressed mortgages, they also created financial stimulus programs to encourage employers to open up and expand job opportunities in different parts of the country.
So Anna, what happens then to their home?
Well, and there's a program called Deed in lieu of foreclosure. And this is a special program where the borrower gets to walk away from their home only with the assistance, acknowledgement, and cooperation of their lender.
Okay, so explain deed in lieu.
A deed is given over to the bank or the mortgage lender in lieu of having a foreclosure. And by doing this in a cooperative way, the borrower is guaranteed that they won't have a foreclosure or a negative credit rating as a result of this exchange.
Well, in the end, Anna, that sounds like a pretty good alternative for a homeowner.
It is, and that's why it's called the Home Affordable Foreclosure Alternative, or called HAFA. And under HAFA, there's a guarantee that the consumer doesn't have their credit rating hurt, and they get a $3,000 relocation assistance check.
Well, obviously, this is great information for homeowners who are struggling. What is your final advice to some of those people?
Well, Kim, I'm always giving the same advice to homeowners. Do your homework, get your paperwork in order. It's very, very frustrating to be able to try to contact your loan servicer when you're going through a financial stressful time. Nobody wants to make that call. Nobody wants to sit on the phone and on hold. That gets very, very frustrating for them. So the first thing they can do is to get all of their finances in order, look at their income, look at their credit, look at all of the payments that have been made, know exactly how many payments they've been behind in the past year. And when they have to kind of pretend that they're being interviewed for a mortgage all over again, answering all those questions, and then be persistent. And if the mortgage servicer isn't providing sufficient information on any of these programs, whether it's deed in lieu of foreclosure or whether it's the home affordable program or anything that would help them, the best thing for them to do is to contact HUD, which is hud.gov, and that will give a lot of consumer-friendly information about all of the programs that we've talked about today.
Great information. Thank you, Anna.